this margin that is here, it's actually the amount you are trading, you are putting into the trade.
We're back with another video, and we're carrying on with our series on the mechanics of binary trading. We've already touched down on binary assets, and today we'll be going into another asset type. Before we get into the thick of action, you already know I am Kolade Daniel, and with me in the studio is
Adeshola.
And before we get into today's video, don't forget to join our Telegram and our WhatsApp communities, and you can also follow us on all our social media platforms via the link showing there on your screen and also in our bio. And today, the asset type we are touching down on is commodities. So just run us through a brief rundown of how commodities work on the platform.
Well, as we already know how to, in our previous videos, we did how to select assets.
Yeah.
So we are going to go through the same process, but this time we'll pick commodities. Now we have gold, silver, crude oil, WTI, crude oil, Brent.
Yeah.
So we can decide to choose anyone. So let's go with crude oil, Brent. So this is the interface of crude oil.
Yeah, so like this values here.
Yes, the actual, according to what is here, this is the basic, the lowest it can go. This, for example, today, right now, crude oil Brent is 63.91.
Yeah.
So there is 10 units of it. The point value is already set at 0.10. But the margin, this is where the work is. This margin that is here, it's actually the amount you are trading, you are putting into the trade.
Okay.
And this leverage is on 25%. 25% is actually a safe leverage.
Yeah.
It's very, very safe. So based on your analysis, you may decide to say that crude oil will go up or go down. That is, go up is buy, go down is sell. That is just it. And you may decide to pick market price also yourself, that when it gets to this particular price, you enter the trade. But as it is, it's better we use the market rate at this particular time. So let's say...
Okay, so using your own expert analysis, can you just give us like an example of one live trade?
Okay. Now, if we click buy, based on what is going on, there is a tendency for the trade to go up.
Yeah.
So we click buy. And the trade have started right now. But from our screen, you will see take profit and stop loss.
Yeah.
The essence of take profit and stop loss is when it gets to a particular level while going up. For example, is 64. You may pick your safe take profit, maybe 70. Okay, so once it gets to 70, the trade will close by itself automatically. And you may pick your stop loss at maybe like 62 or 61. Once you get to that point, it will stop the trade. So it will limit your loss. So let me show how we add the stop loss and the take profit. From here, you just come to add. Right now, if we say, for example, 66. Okay. 66 points. Based on this 25.6 margin that we're using, based on this that we put in, 25.6 that we put in, if the crude oil Brent enters $66 per barrel, your profit will be $19.9 if it gets to that. So we just set it straight. It's there. Now for the stop loss, we'll come here also, then, which is the acceptable. Remember, you put 25.6 there.
Yeah.
So you need to decide what is your acceptable loss range. Right now, the open rate is 64.
Okay.
If we put like
60.
60 would be too low.
Low. Yeah.
60 would be too low because at 60, you already lost more than what you put in.
Yeah.
So 60 cannot work because this is your margin and this is your investment.
Yeah.
So we can put, remember we enter at 64. So if we put 63, okay, if we put 62.
Yeah.
Or let's leave it at 62.
Okay.
Now at 62, you are going to lose $20. That is if crude oil gets to $62. If it falls to $62, then you set. As it is, you don't need to come back to this trade.
Yeah.
It will close by itself. It may take hours and it may take days, but it will close by itself once it gets to.
Could it also take minutes, depending on the market?
Depending on the market, but if it takes minutes, that means the market is too volatile for that day, and on a volatile day, it's better you stay away. It's on a volatile, very volatile day, it's better you stay away because it can quickly go to your stop loss and jump back to your take profit. But where did it get to first? Stop loss. So it will close your trade for you.
So that's practically how
it works.
Yeah, and that is a practical example of how trading on commodities work using the Polarium Broker platform. This is one video where you have to follow everything step by step in detail, and you have to take everything into consideration.
And I want to add one part. If you decide that, okay, you don't want to wait till it closes by itself, you can always come back and click close. Maybe you have seen a good profit to you.
Yeah.
Because you put 25 and you're already on maybe like plus $5, then you can come here, just click close. If I close this trade now, there is a loss of 19 cents. If I close this trade down, but I don't want to close it. So I will wait for it to be in profit before I close it.
Yeah. All said and done, these are practical steps and examples for you to follow. And to those who have been following us up to this point, if you are yet to hit the subscribe button, make sure you do that. And just like I said at the start of this video, you can also follow us for more trading tips via all our social media platforms, through the links in our bio, and also via the link showing right there on your screen. If you're someone who has a proper knowledge about commodities, you have insight about them, this video is probably for you, and these are things you can follow on the Polarium Broker platform. It's a very, very straightforward video, straightforward example on how you can also trade on commodities. Once you follow all these steps that we've shown here, it's going to be seamless and straightforward for you. Until we come your way next time for another video, bye for now.